Another weekly installment. I have shared my sentiments on being short the market for the last 2.5 weeks. I went short the market, which has been just the inverse of what's happened to the NASDAQ. I think it's up 15% in the last 2.5, 3 weeks. And so that has been painful because I was shorting it 1.5 times. So I'm down 22% in 2 weeks. However, I'm staying with my conviction on my net short position, and I will hold as long as necessary. You might notice as well, I decided to shave off. It's growing back now. It's a few days growth back, but I decided to shave off my my beard just for some fun. Try something fresh, something new, and soon we'll get a haircut as well. It's time for a haircut. But yeah, I've gotten a haircut in the stock market the last 3 weeks. I think my short positions are down 950,000 unrealized. So that's a huge hit. However, I'm looking at the data and I see rates going higher still. Real estate looking to correct. We're moving into a curve where we've seen it across the US on average and in Canada. In the US, it's like 20% drop. In Canada, in some parts of Ontario, 25% drop in the price of real estate. That's huge. To see in a 4-month window or 5-month window, us lose 5% a month on properties. So $1 million property loses $50,000 a month continuously for 4 and 5 months. We have people who have lost their, effectively, if they bought it in February, their entire down payment is gone. Whatever equity they had in the property, gone. Now they may not realize that because they're holding it and it's cash flow positive and whatever. I mean, if you're cash flow positive, whoa, hello. I forgot to turn on my lights, so there's a bit of a rush this morning. This afternoon to get everything set up, and it's been a busy day. Yeah, I think that going into this bottom, there will be an opportunity, and that's why I have my short positions on. I can't be long the market when all of the data, to me, seems lagged. So, as an example, rates are still getting worse, and the ramifications of said rates typically take 90 to 180 days to really be felt in the market. So the job loss to come still hasn't hit yet. And once that happens, all those people that are laid off as a result of said recession that started this spring, really, it didn't really get bad till this spring, this summer. And so there's a lot of euphoria in the market, a lot of optimism. That's not what I want to be buying. I get that. So in general, you want to be just dollar cost averaging into the index funds, be super diversified on a little piece of everything, and you'll be just fine over a 5 or 10 year period. But in the short term, you want to try to buy on the down days, on the red. There will be another opportunity, I think, coming up. All we need is a bad jobs report, consumer spending to drop, which will come, some discussion in the media about the fact that real estate is falling like a brick out of the sky right now. That said, there's still opportunity to buy cash flowing properties. We don't know when it will pivot. So right now, you can literally offer $50,000 under asking on pretty much any property on the market right now, and your offer will get looked at and discussed and negotiated with. Whereas 6 months ago, you would throw out an offer at asking price, no conditions, and they wouldn't even look at it. Oh, no, we'll look at it on offer date when there's 10 offers, and then they want way over asking. That market has shifted. And so for us buyers of real estate, fantastic. For the sellers of real estate, remember, in a down market, the quality properties with great cash flow in good locations, desirable properties tend to hold their value. Waterfront real estate, luxury real estate, A location real estate tends to hold its value very, very well. It's the B, C, D junky stuff that sells at quite a discount. The stuff that isn't cash flowing as well can also sell at discounts because people can't afford to hold, right? So this is an opportunity for the right type of person. It's part of why I'm actively discussing merging with a couple of local wholesalers, or maybe one particular wholesaler, and blowing up that market and building out a team. I'm at the point where I'm ready to drop $250,000 on marketing and staffing and building out a robust acquisitions arm. And that would mean for you guys watching, here's the value of the stick for you guys. If you're looking to acquire, I'm going to start locking stuff up under contract that I think is great. I'm going to get my team to start doing that. We're going to start assigning contracts. I'm going to start closing them myself, but there'll be so many deals at the bottom that I won't be able to close them all. So either I partner up with people or I assign them off and you can have the deal for 5 or 10 grand or whatever. We'll just assign the deal to you. You can close it and get the cash flow. So I'm gonna start locking deals up, give them the Rosehart blessing and assign them or take them down myself. And I just see so much opportunity around me. I've got agents calling me now saying, like, I haven't seen this since 2015 in London, 2014, 2015, where agents are following up and like, hey, you saw the property last week. What did you think? You want to throw in an offer under asking? Like, we'll take anything. We're going to price reduce. That type of discussion, I haven't seen in a long time. And it's a great feeling. Really and truthfully, it's great as a buyer to see that. It's more balanced now. So stuff isn't selling for like, pennies. It's, quality properties still holding their value. People are still looking to acquire cash flowing assets. If you have cash flow positive properties, don't sell them now. Unless of course you've got a good reason to, like so in my situation, I almost always end up selling the property. And I know it doesn't make a lot of sense, but for me it does, because I see 3 other opportunities screaming at a significant discount. So I've turned this property to a realized value, and I can go buy something else at a lower value and make more money. So I can continue to cycle to the next property, the next property. So that, for me, turning over real estate actually increases the velocity of my capital growth and my money growth. So that's for me why I continue to roll through properties. But most people, they work a full-time job. You got your dentist who's working his full-time job or her full-time job, and she just wants some cash flow on the side, build some retirement portfolio, have some diversity of assets there. And real estate does that in a way, from a safety perspective, in a way that no other asset class does that. So even a REIT is subject to so much volatility. You've got to look at the ticker and watch the price, and it's hard to watch that, as well as having no operational management control. But if you build a small portfolio for yourself for retirement, one, you've got full control of that portfolio. Management can never destroy you and take all the money and have the stock be worthless. At least when you own the tangible building, you're in control of it. That's a double-edged sword, because again, you're in control of it. So you control on who you hire as a property manager. If they mess up, if they steal from you, if they put terrible tenants in, that's on you. At the same time, if you do a good job with that, again, it's on you. So you get to reap the rewards of that. And with leverage, right, putting a mortgage on a property, you can typically get 4 to 5 times leverage pretty easily at 20-25% down. That means that if the property appreciates, say 5% a year over 10 years, you've got basically a double almost in the value of the property, pretty close. And so that could mean on your down payment, if you put 25% down, you've made 100% return in 4 or 5 years. You will not do that in the stock market. That just, on average, that won't happen. So real estate does outperform as an asset class. There are downsides that you do have to manage it. It's more active in nature. I've always liked real estate as an asset class. I'm prepared as we enter the bottom, and not even just the bottom, because I don't know none of us know where the bottom really is. Again, I shouldn't even be shorting the stock market, but I am, because I'm waiting for a time to enter and dollar cost average in and roll my shorts into longs. That's the reason I'm shorting right now. But I just want to have capital when no one else does, which is why I have so many shorts in my portfolio right now. I literally own like $3 million of the NASDAQ short. So I owe $3 million of NASDAQ shares, which is fine when it crashes and I can buy it for pennies on the dollar. I think the next bottom we'll see will be sometime in the next year, next 12 months. I'll probably have to hold through midterms, that short position. I think they're going to pump the market up, realize that inflation is again out of control still, that the real estate market is down 35% by then, I think. Possible it's down 25-30% now, but once that starts to get publicized, we start seeing those comparables close. They're selling now, but they don't close, just transfer hands and become a usable comparable for an appraiser until that, like a couple weeks after they close. So we won't see the effects of the sales that are fire sales that are happening now and their effects on the market. So that's still to come. Some people still have old rate holds. Those are expiring, people having to refinance. The longer these rates stay high, the more pain there will be in the sectors that are tied heavily to debt. And real estate is very highly tied to interest rates. It's just the valuation of real estate. Typically, every 1% rise in interest rates should correspond over the long term to a 10% drop in the price of real estate, in the short term. So if we go up 3%, we should see a 30% drop. If we go up 4%, 5% with interest rates, it's possible we could go from a 3% mortgage to a 7% mortgage. That's a 4% hike. That'd be a 40% drop in the value of real estate short term. Now, long term, real estate is not making more of it. The land is scarce. Populations are rising. There are certain trends that, the price of labor to build a house, the raw material inputs to build a house, again, going up like crazy, right? So over time, the value of the building will increase, hopefully faster than the building's depreciating, and the land, the dirt that it's on, will also appreciate over time substantially. So that is to me, that is something that is very attractive about real estate. And the leverage component just makes real estate such a great business. When you buy into a business, typically, the only businesses that I think that make a lot of sense for me are businesses that are synergetic or strategic to my overall YouTube channel, brand, what I'm already doing. What do I do for fun? Mike Rosehart sits in bed on his phone looking on MLS at properties. That's what I do for fun. Legitimately, that's like, even if I'm not looking to buy, that's what I do for fun. That's what I love. So if I built out a robust wholesaling arm where I was constantly writing offers on all the stuff that I like, I analyze it, I like it, we send it to our analysis arm, we go check it out, we get pictures, videos, we negotiate a really great price, we lock up under contract, we assign that to someone else, or we close on it with our acquisitions arm, right? That's a synergetic business. I should blow that out. That would be a business that I would enjoy, that I could empower people to do, and it would just be synergetic to the other businesses that I have. So that's something that I need to be, like, on my vision board, I'm like, that's something I need to have. We had that in 2019, 2020. I had wholesalers out there knocking doors. I had full-time people that were actively hunting for deals. That was how we were buying over a property a week. I need to go back to that. We're at a point now where for the last year and a half, you guys know, I've been relatively bearish on real estate. I've talked ad nauseum on this channel about how I've been neutral and bearish in the short term on real estate. Now, if you're a flipper and you can get stuff under market, you keep doing what you do. No matter what the business cycle is, you just adjust your numbers to I've got a couple deals I'm closing right now that I got 70 cents on the dollar, 65 cents on the dollar. We have a couple all over the place that we're working on. Those projects are far enough under market value that even if we have a recession, I'm not worried on any of those projects. We could sell them and still make a nice profit. We could hold them through because they're cash flow positive type properties. We could hold them, it's no big deal. So it's one of those opportunities where I've got to align myself to really rip out of this recession and put myself into, if I want to get into the 9-figure category in the next 5-10 years, which I do, I want to have a 9-figure net worth. I'd like to have a $250 million assets under management. It's one of my goals in the next 10 to 15 years. By the time I'm my 40s, I'd like to have that. I'm 29 now, so I'm aging, which means I started this when I was 18, so I have 11 years. I'm coming up on 12 years of experience in the game. Bought my first property at 19, as you guys know. I've been doing this for a long time, and so now I have all this wisdom. I've done a lot of the motions. It's time to really build something that is synergetic and scaling, as well as fits the lifestyle vision. Like, what do I want to be doing with my life, and what do I enjoy doing? Like, if you sold me a business right now that was like, I don't know, just pick some stupid business like a ice cream store or something, I wouldn't want to go in there and run that. Even if you gave me a McDonald's franchise, what am I gonna do with that? Like, I have no passion to run a McDonald's. Like, that's not a business that I have any business investing in, because I have no passion for it. There's no synergetic opportunity between my current brand and leveraging that in a certain way. So let's do some Q&A, because I see some stuff popping up. William, how you doing? It's really hard to do well right now. I really want to go to a farm outside Tokyo or Buenos Aires and just bury my head for a couple of years. Properties are so low in both areas. Yeah, I mean, there's just a global sort of recession right now that's, it's tough. That said, there is so much opportunity right now. So are we at the bottom? Who knows, right? At a certain point, I have to switch from shorting to going long. I believe long-term that the stock market will roar. I'm just waiting for a good entry point. And I've been wrong the last 2 weeks. Like, man, have I been wrong the last 2 weeks. In the short term, remember, I preach this ad nausea on this channel. It's like, you cannot time the market. No one trades the market and beats the NASDAQ over a long period of time. 2 weeks ago, I was beating the NASDAQ. I should have stopped while I was ahead and just dollar cost averaged in and rode the index. I'd be up I'd be up the 20% I'm down, and I'd be up 15%. I'd be up 35% right now. I just longed the index 2 weeks ago. Crazy, right? But there will be a point, I think, in the next year where my shorts will be profitable, and I will close them, and then I will get into the market, and I'll just leave it. I'll watch it and don't touch it. Leave my dividend portfolio. The only reason I closed out the dividend portfolio that I had in February is just fear that things were going to collapse. And so for me, it was a lot. Like, I still have a small dividend portfolio, a couple $1 million, but my other portfolio, my more active portfolio, Interactive Brokers, I closed a lot of my positions because I probably should have stayed in cash, to be honest. But I went as far as, like, everything I'm seeing is screaming that we are not done yet. We are not out of the woods yet. We're in a bear market the next 12 months at least. We're having a euphoric relief rally right now, and no one knows the future. The discount rates for valuations on companies were based all on 2%. And now we have 6%. So even if these companies were more profitable and had great quarters, which they didn't. A lot of them had shit quarters, like Amazon didn't deliver great earnings. A lot of these companies didn't deliver great earnings, but jumped 15% after earnings. I'm like, what? This makes no sense. It does make sense from the context of we're getting away from value fundamentals, and we're looking at most of these hedge funds are in a position where they've lost 25% on the year, and they're about to lose half of their assets under management that redeem in November. And plus, it's a midterm year. So because there's midterms in the US, the government's going to want to look good, obviously, so they can get reelected. So they're going to put in some policy stuff that's going to look like it's going to have an effect. They're probably going to be a little bit more cautious. I'll say cautious with their wording when Jerome Powell's speaking. He'll be more cautious because I'm sure there's an eye watching him on what he says and what he does. And so we may not see as much tightening as is needed. And so there might be a little bit of a relief rally, and that'll be painful for me as a person who's currently short the market. But I will be long the market again. When I see an opportunity. There was a point when the QQQ hit 267, which is like 20% lower than it is now, and I thought about going all long. I went long, and then it went down another day, and I was like, you know what? I don't think we're all the way there yet. We haven't seen a lot of the effect. We haven't seen companies lay enough people off yet. The ramifications of all of this. We haven't seen large real estate funds go belly up yet. We haven't seen stuff get fire saled yet, and that's coming. Shit's not sustainable at 6 and 7% interest, and we have to fight inflation. They will get inflation a little bit under control, but they're not going to get it all the way, and so they're going to have to tighten harder. And it's that point at which rates start coming down. Once we've got inflation under control, maybe we have a little bit of deflation for a bit there. When growth is good and everything's kind of at a point where we're at the bottom, right? There'll be pain everywhere. That's when they'll start lowering rates and we'll start going through euphoria. That's when I want to buy. So I want that pain, and then I want the government to react to that pain. Like, we're in full-on recession. Everyone admits it. Shit's horrible. That's when you want a DCA, dollar cost average, into the indexes. And so that's also the time when you want to go hard on real estate. And I want to have the ability to have deep pockets at that time and be able to acquire a bunch of stuff. So I want to align myself to that. So yeah. Yes. Next question. Where's the skateboard and the beanie? Yeah. This is just me just growing my hair out. Like, someday I might be bald, like, it's in my genetics on my mom's dad's side. He's pretty bald. So like, I may lose all my hair. I might as well enjoy what I've got. It's the surfer vibe. I'm going to Florida in the winters. I'm just enjoying myself. So I could give two shits about trying to adhere to cultural or societal norms. I did shave off the beard though. Elise was like, let's try it without the beard and see if we like it. And she always likes it. Every time I shave it off, she's like, oh my God, how can anyone kiss someone with a beard? I don't know. I mean, to me, it doesn't, I don't feel it one way or the other, but it is cooler in the summer. I will say having, a beard is a little bit, it's not as nice in the summer. In the winter, it's quite nice. What's the average return for real estate? So Ghost Recon, there's no like, this is your return. It depends on the asset class. There's so many variables that it's hard for me to say, hey, this kind of property generates you 20% return, and this kind of project 50% return. What I can say is, in general, if you're buying property at significant discounts and then you're renovating it and improving the value on it, or changing the tenant profile of the building, repositioning the building in some way or the property in some way to add value, you can usually do a double on your down payment, which means like a 25% total return on asset if you're buying it in cash. That's pretty easily attainable. Sometimes you get holy grail projects that are a double. So you buy it for 150, it's worth 300. And that's a really great situation, because if you put 20% down or 25% down, that could be a 400 or 500% return on your down payment. That's a ridiculously great return using leverage. It's hard to do that in any other asset class at the same risk level, right? Hey Jonathan, how you doing? I heard you can get margin call in real estate. In a downturn, the property goes down in value and the banks will ask for more down, or they will liquidate you. No, so banks are not reaching out, at least not in Canada, they are not reaching out and saying, hey, we want you to to put more down. No. You're locked in, you make your payments, you're all good. Even if you don't make your payments, the bank doesn't want your property. They don't want to go through foreclosure. That looks really bad on their books. And it's a lengthy, expensive process for them. It looks bad on them. They want to work with you to keep the mortgage payments going. When they agree to a 4% or 5% mortgage, whatever they agree to, they want you to make the payments. That's the best case scenario for them. So no, they will always work with you to try to keep you in the house and keep you making the payments. So there are no margin calls on real estate. That is another reason why I love real estate. If it's the stock market, they're going to margin call your ass real quick. Yeah, for sure they will. I see someone just put a comment in here. He shorted the bottom. So Wandering Nomad actually didn't short the bottom. I think it was, we were at like 266. I watched. I waited for things to bounce, and I rolled from long to short at like 285 on the QQQ, which ended up being shit. In hindsight, I saw a nice little, 5%, 6% bounce rate, a couple really good euphoric days, and I was like, geez, like a nice little dead cat bounce here as we continue to go lower. Who knows, right? Like no one fucking knows what the bottom is. I'm pretty sure in the next 12 months we will see those levels again, and because I just own the shares short, I'll just close that position then, right? Like it's no big deal. It's only a problem if you get to the point where your margin called on you lose that position. If you can continue to hold that position through said, rip up, then it's fine. If there was any indication to me that, we're just going to rip up from here, everything was kumbaya, we're back to 2-3% interest rates, I would close all my shorts out. Like if there's any leading data that suggests to me that we are done with this recession and the pain is not going to get worse, I will agree that my thesis was wrong, close it out, take the $800,000 loss and whatever. I'm like another 10%, 20%, and I'm back to where I was, whatever. That's like 2 years in the stocks. I'll just dollar cost average, 2 years from now, I'm back to where I was, whatever. I think that we're going to, and hopefully I can close those shorts out on a down day, by the way, not on an up day, so that will mitigate some of the pain. But the truth be told, no one knows. Like even the smartest of guys have no idea, right? People shit the bed all the time. And government officials, especially, hedge fund guys, especially. No one has any fucking idea what's going to happen in the future. So that's the truth. Thanks, Chuck, for that comment. Time the market. No one can time the market. I wish. We get lucky sometimes, myself included. Yuri says, I wonder how does it make sense for you to be physically working on a project, say in the US, that will potentially be selling for a small profit? Isn't it a low-paying job? So I'm back in Canada right now. So I'm not in the US right now. But you're right. I mean, for me to physically work on a project would not be worth it. My brother is working on the project that's happening in Florida right now. So he's working on fixing that up for me. So I was just there getting him kickstarted, right? Yeah, it doesn't make sense for me to do any manual labor ever. It doesn't make sense to cut my own grass. It doesn't, unless I want to do it. There's no financial narrative when I could easily do a coaching call at $500 an hour, or find properties and lock them up. I can lock a property up a day and assign it for say 10 grand. That's like over $1,000 an hour. That's for sure a better use of my time. You're right. There's no good financial reason for me to want to do anything menial that pays less than $100 an hour. It just doesn't. But if you can design a lifestyle where, like for me, I don't want to be in Florida in the summer, that's for sure. But Florida in the winter is beautiful, right? Getting away to some tropical destination. Now, when I'm there and I'm doing the life that we want to live is like, we want to be in Canada in the summers, but we don't want to be a tax resident of Canada because Canada's tax system sucks. I'm years away from making that transition. We're working towards that plan. There's a lot of complications and wrinkles and planning that goes into making a big decision like that. But eventually I think we will shift to a tax-free destination, somewhere like the Bahamas, where you file no personal tax returns, none. You don't report anything. That's pretty sweet. Your corporations in these offshore destinations like the Bahamas, for you to be a tax resident there, you have to spend 91 days a year. So 91 days a year there, boom, you're a tax resident. You have to stay out of Canada or the United States for 6 months, or say up to 6 months a year. So I could spend 6 months, I could spend 5.5 months in Canada, 3.5 months in Florida, and 3 months in the Bahamas, and boom, I'd be a tax resident of the Bahamas and not a tax resident of the US or Canada. Now, if I had corps still operating in Canada and a corp still operating in the US, those corps would effectively still pay tax on any income they make in those countries. However, you could bleed a lot of that through with consulting income and pay corporations in the Bahamas, and it would be very, very favorable because the Bahamas tax rates are very, very low for the corporations. So it's there are definitely some schemes you can develop, or tax efficiency systems you could set up that would mitigate that burden significantly. For me, it's about lifestyle. So if I want to be somewhere warm in the winter anyway, and I'm going to be bored if I'm there, I need to line up projects and do things that are fun for me while I'm there. So that's what it's about, right? And if I can have a business that's building cash flow in different countries, that's great. I would love to have a robust US arm that's being paid in USD. So if I need to spend in USD, I'm making money in USD and I'm making money in Canadian. Maybe in the Bahamas, same thing, or Costa Rica, or wherever we decide to set up a second and third residences. It's nice to have income coming from multiple countries. It's diverse. But yeah, I mean, running a business where you're not actively there requires you to build systems. Now, I had a business in Canada at one point where I could go away on vacation for a few weeks and things would run themselves, right? You set that same thing up wherever you are, and if the systems are working well, then you don't need to be there physically, right? So that's where having good systems and good people, more importantly, is super important. My brother, as an example, is just crushing. Independently, he needs almost very little. Like, I touch base with him daily. That's it. He doesn't need a whole lot from a management perspective. That's important, right? Having key people run key projects. Okay. Denny says, "Hey Mike, I got a property in Brampton with $550,000 mortgage left. Just used 80 to legalize the basement as a second suite. Renovate the upstairs. About to sell it now. 1.2, 1.3. Good decision." Well, I mean, if you can get 1.2, 1.3, I don't know what the value was in February or March, but if it was worth 1.2, 1.3 then, it's probably worth 950 now. That's a bit of a devastation for most people to realize that the comps are down and the prices are down, and the frothy tops of March 1st here in southwestern Ontario are gone, and that the nice thing about having a property with multiple units, like you mentioned, or second suites, is usually there's enough cash flow from a multi-suite property to be in a position where you could hold through said recession, and maybe next year or the year after, when rates go from 6% down to 3% again. We'll say by 2025, 2026, I could see rates coming back down, right? As they stimulate the economy and get things under control, I could see rates coming back down. When that happens, real estate's very attractive again, right? Like a 7 cap property or 6 cap property is super attractive when you can borrow at 3. It's not super attractive when you're borrowing at 7. There's zero spread. Your cap's 7, your property's borrowing at cost of debt 7. There's no spread on every dollar you borrow. So only cash buyers are really loving these low cap properties. So it's just funds, large hedge funds and real estate funds are coming in and buying stuff. Doesn't make a lot of sense for the average investor who uses debt. So yeah. Are you looking at any markets on the east side of the world, especially with degradation of the West on all fronts? So agree in general that China and India will overtake the US as an economic powerhouse. So the US is currently on top, but they are losing margin quick. That's a reality in the next 25 years. No, I'm not. It's far. I don't want to be on a plane for 22 hours, and I have no language skills. Like, I don't speak Mandarin. I don't, I just don't have any advantages to buying real estate or doing like the skills that I have. I'm very, very good at real estate. That's negotiating, finding off-market properties, the analysis, all of that. I have operational competitive advantages in. That is not to say that I can't develop competitive advantages in another business relatively quickly, leveraging skills that I already have in my business degree and everything else, but just no interest in doing that right now. I'm in a position where, like, I lose $1 million in the stock market and it fucking doesn't even faze me. Oh well, like, it doesn't change my life at all. I make $1 million, lose $1 million. If I lost $5 million, I mean, that would start to mean something to me. Anyway, like the point is, like, I'm in a position in my life right now where I want to do things that are exciting and fun. I like building businesses, I like doing things, but only to the extent that it's enjoyable, right? To the extent that it aligns with my values, that it aligns with my life's mission, right? So, yeah, if I'm going to do something, it's got to be something that I enjoy. It can't just be about the money. So, yeah, same with the people that I try to surround myself with. Like, I don't want to talk to people who I don't like. So I've purged all the investors I don't like already. I'm only dealing with people that I enjoy talking to, people that, I have meaningful relationships with, and I want to continue having meaningful relationships with. I don't have any interest in talking to a one-time investor to do one project. Like, no interest in that. Yeah, I'm in a stage where I can be very picky because, again, it's not all about the money. It's about having a good life. right? That's when I started this journey 10 years ago, more than 10 years ago. I started this journey 13 years ago towards, early retirement and FIRE and all of that. When I retired in, I guess, early 2017, yeah, so like 4 or 5 years ago. Yeah, it's over 5 years now since I quit my job, but kind of like 5.5 years almost. When I started on this journey initially, before I even put in the work to build the net worth, it was all about just unlocking freedom. And so that still is at the forefront of my focus, more than being having 100 million or a billion, which will come in time. If I just dollar cost average into the market and ride the market for the next 50 years, I'll be a billionaire. That's just, inflation will help carry me there. Continued compound growth, unless I shit the bed. I mean, it's possible. I could just short the market and be totally wrong and stay short for years and years and years and be stupid and blow up my whole stock account and then fucking waste millions on some other stupid venture. It's possible, I'm sure, to lose money. But as long as I don't make any stupid decisions and continue to grow, then I'm on a good path. So anyway, more questions to help you guys. What can I do to help you guys? Let's see what the next question is. Next question was, are you planning to hold in cash Canadian or USD and potentially other currencies? I have a little bit of USD. I'm pretty much all in Canadian. I have a lot of US equities though. So when I talk just about cash, I have mostly Canadian cash. But when we talk about equities, I have a lot of US equities that are down for the most part in that portfolio. I actually have I'm short the QQQ. So technically I owe a whole bunch of USD currency. I should hedge for that in hindsight. I should be hedging for all of that. I did have hedges set up before, but they all expired actually in the spring. Yeah, I should definitely set up some more hedges for that. That'd be smart. It's not a great time to do it. The USD is really strong compared to the Canadian right now. So yeah, that's something to think about. I should have more USD gunpowder. That'd be important. I think it's good to have multiple currencies, and diversification is important. Wandering Nomad says, Ontario is overpriced compared to wages when you compare it against both other countries and other provinces. Yeah, Ontario's fallen a lot though, and it's getting more and more attractive. We're getting closer to a point where 1% rural properties have come back in southwestern Ontario. I'm starting to see multifamily properties that can rent for $4,000 a month that are selling for $450, almost $500,000. We're getting close. Where like in February, March, it was like $4,000 in rent got you $750,000 sale price. So we've seen quite a bit of a pullback. I don't know how much further it will go. I think it will go a little bit further. I think the effects of this will be more talked about. Right now, it's still hush hush. Most people aren't reporting on the fact that we had these huge pullbacks, and the ramifications of a falling market are people stop renovating, they stop expanding, builders go belly up. When I start to see a lot of builders go belly up, because that's coming, new home sales are down. When the builders start going belly up and the layoffs start, because real estate is like, in southwestern Ontario, it's like the number 2 producer of GDP, right? Like all the services related to real estate and the transaction of real estate and the improvement of real estate. When real estate actually shits the bed, and it's coming, it will fucking crush the economy. And that's why I'm short, in part, at least. The lagger ramifications of what has already happened and what is happening now are negative. If anything, I'm neutral. So I don't feel like, by being short, I don't feel like I'm missing out on a huge rip that's about to come. Like, I don't think we're going to get back to January levels. And if we do, it'll be short-lived. I don't see it being something long-term. I think, well, long-term, yes. But in the short to medium term, I don't see that being something that will happen. But who fucking knows? To be honest with you, like, anything can happen. And one thing we know about public markets is anything can happen. People are crazy. A lot of people got a lot of money, and they can pump and dump, and things can happen, and we can get into crazy euphoric cycles. There are a lot of hedge funds right now that are going to lose a lot of assets under management. Like, they might lose 30-40%, and redemptions coming up in November. And so it's like, they either need to make 25%. If they lose another 25%, who gives a fuck? Because they're losing the money anyway. They're losing the assets under management anyway. So they need to make up performance big time. So they're going to take some big risks. Things will be probably a bit euphoric. There should be more volatility. I think the VIX is low right now. If anything, I think the VIX is going to spike again. That'd probably be a good little investment for you guys if you're looking for a tip. I think in the next 3 to 6 months, if you were to just sell some puts on the VIX, you'd be good. It's a good little investment. I wouldn't bet the whole farm on it, but it'd be a good little play. Denny says, what do you think about the BRICS coming up with a new world reserve currency they just announced? This is pretty revolutionary. Can't believe the dollar will be challenged in our lifetime. I think BRIC, you're referring to Brazil, Russia, India, China. Yeah, I mean, it's in our lifetime, we will see the U.S. transition away from being the economic superpowerhouse that it is. It will still be, a player, but it won't be the leader in the same way that it has been. And so that has effects or ramifications, sure. You should own equities that are not just USD. Yeah, I mean, Hong Kong is not doing well either. The real estate market in Hong Kong is just fucked right now. People are just walking on mortgages there and just not paying. There's run on banks right now in Hong Kong. So it's a gong show there. Things will get worse before they get better. We are in need, after all the stimulus that we've seen the last 5 years, specifically very heavily in the last 2 years. There are ramifications when you print 50% of the money supply, right? Like when you just double the money supply in a 2-year period and growth hasn't, like the country hasn't grown, really, GDP hasn't changed all that much, you get inflation and you get other rampant problems as a result of that and devaluation as a result of that. That's something to think about. Something to think about when you're making your investment decisions. Okay, someone says here, next question was, Zach says, I'm saving my USD to buy the dip at the end of Schmidt a year in September. SQQQ hodl until 2024 Q2. There you go. That's smart too. I mean, SQQQ is just the short QQQ. I think that that would not be a bad play at all. If you, for the next 2 years, were to just go long on shorting, so buy the SQQQ, you'd be great. I actually hold short the QQQ. So the nice thing about that is I can apply a little bit of leverage, whereas the SQQQ you can't. Probably smarter actually. Just get the SQQQ because then you can't get levered up to the tits and get called. As long as you can hold through multiple quarters, you'll be just fine. I think in the next couple of years we will see a real correction. We already saw a nice correction, but it wasn't far enough. It wasn't painful enough, and one will come. One will come. Do you ever look at these market cycles and think hush hush mentality surrounds market cycles? You know what I think? I think there are so many different theories and theses on trying to predict the market, and I think none of them is 100% accurate. Macro cycles, micro stuff, looking at, trying to look at charts and trying to predict based on previous volatility or previous ranges or previous technical data. People use technical factors to try to predict where the market's going to go. It means fucking nothing. All of those models break. None of them are highly reliable. If they are reliable for a while, they aren't for the long term. They continue to break. I like to invest for the long term. I tend to always be long the market because I know long term equities grow. I like to own a little piece of the whole world. I'd like to own a little bit of, I own the Russian index. It's frozen right now, but I have 140 grand Canadian in the RSX. And so I bought it just before it closed at like pennies on the dollar. It was like near collapse or whatever, right? The Russian economy will be just fine. Yeah, there's sanctions and shit, but like Putin will die, right? He's got like blood cancer or whatever. He will die in the next 5 years, 10 years. The war isn't going to go on forever. And long term, they're the largest country in the world by landmass. They have huge amounts of natural resources and I don't know how many people Russia has off the top of my head, but I want to guess like got to be at least 150 million. That's huge. There's a lot of people there. They're a powerhouse. So to say the Russian economy is worth nothing, worthless, zero, pennies, it's fucking stupid. Of course it's got value. Same with China right now. There's value in China, in India, Brazil. I mean, a lot of these emerging markets, India, if I didn't say India, I think I already said India, but whatever. All of those markets, you should own a small piece of all those indexes. Just being heavily weighted all, as I say this, my portfolio is like 85% US equities. Fuck. This is why we talk about these things. I'm like, I need to correct. I shouldn't be like 85, 90% US equities. What? Okay, maybe it's not that high. I have a lot of Canadian equities. Maybe it's like 65% US equities. Still, I'm way too heavily weighted to one country with what? 300 something million people? We're talking like a micro percentage of the world's 8 billion population. Yeah, I disposed of a large, I'm going to disclose this for you guys. I'm long-term bullish on crypto, but I dumped most of my Bitcoin and Ethereum, almost everything. I dumped a lot of it. And the reason for that is I'm waiting to get into the bottom. And we saw a bit of a rally this past week. I dumped it. I thought tax loss harvest. I'm down quite a bit. I can take all of those losses and put them against my real estate gains, which will offset taxes today. And then I buy back in. And the future is going to be bright. And so I'm going to ride that. Hopefully I can buy in at, I'm hoping Bitcoin gets down to like $10,000, $15,000 USD a token. And it'll be great, I think, to get in at that price point with $10,000-ish a token. I'll probably buy 100 tokens, Bitcoin tokens. And then, I'll stake them or whatever, and I'll sell them to someone for a huge profit later. I believe in the technology, and I want to support that. And I think that the current currencies are going to lose some value. There you go. Someone says 8,000 USD, 15,000 Canadian. Who knows where the bottom is, right? I'm going to start dollar cost averaging. When I see 15,000 Canadian, I'll start dollar cost averaging. I like Matic too. I used to have a whole bunch of Matic. Unfortunately sold it, but bullish on all of those tokens, right? Not all of them, but there are several tokens that I'm bullish on. And the tech itself, I'm very bullish on as well. I think it's going to change the world in a lot of ways. And it's more efficient per transaction than what Visa can do. Monero's for more sketchy, if you're trying to do some dark web stuff. But again, I'm not a crypto boy. Like, I'm not all in on crypto. A very small percentage of my net worth is in crypto. It's an asset class like gold or silver or real estate, or there's lots of businesses, stock market. I think that it's important to have a little bit of every asset class and to be diversified. Whenever you do, don't go all in, balls deep on one thing. That's not me. I've always been about preaching for diversity. Owning a little piece of everything is way better than owning a big piece of one thing that could collapse tomorrow. Many streams, many legs on the table. Keep the table strong, keep the river rushing. You know what I mean? Like, you want to have diversity. Okay. William says, it's amazing that the US market is still hippie level high. The Shiller ratio at 30, AMC at 17, GME at 140 pre-split. It's really stunning. It is stunning to me that the market is rallying right now. We're like only, I think, 14% off all time, 15% off all time highs. How is that attractive? Given the current environment we're in with crazy high inflation, we're talking about interest rates at like a mortgage at 6-7%. When you value a company, the discount rate that you use needs to now be twice as high as what it was. Potentially for the next 5-10 years, we could see rates being 30-40% higher than they were at the low. That means valuations have to fall 30-40%. That's it. Fact. I think the government will overcorrect. I think we'll have deflation. People won't want to have, or they will want to have cash, and they won't want to have certain asset classes. And I think cash will be king in the next 24 months. We're going to see a period of that. So yeah, don't stake on Celsius. Don't do that. Be very, very careful. If you're going to stake small amounts on exchanges that are safe. If it's paying you 10% interest, there's probably a good reason why. So be careful with the smart contracts that you enter into. Be very, very careful with staking. There are places and reputable places you can do it. Just do your research and be diversified. Don't stake all in one place as well. Again, all your eggs in one basket makes no sense. Yeah, I think that it's again, I'm not super bullish on crypto. I don't think it's gonna, ever comprise more than, and even if crypto ripped up and like it became 30% of my net worth or something, I would probably rebalance and sell at least half of that position and go into other asset classes. Again, because I believe that though it is a great technology, I believe that a lot of companies will encompass blockchain technology to do transacting more efficiently. As an example, our current land registry system in real estate is so fucking archaic. A courthouse burned down in the Bahamas and they lost property records. They can't even find the root title in a lot of cases. If it was on the blockchain, that'd be so much more efficient. Why do we even need lawyers? We could see who owns title on the blockchain and you can transact. You don't need to spend $10,000 on closing costs to verify who has title. It would be so much simpler if it was all on the blockchain. If we were lending on the blockchain, lenders could remove their smart contract loans. It'd be way better. The banking system is currently like a multi-trillion-dollar global system which could be replaced much more efficiently. We could save on hydro. People talk about crypto being horrible for the environment, but like, fuck, Visa is horrible for the environment. The current banking system. I used to consult as an IT business consultant for some financial institutions, and I'll tell you, their data centers are not efficient. They're fucking burning down the world too. So you can go check your balance online and do a transfer that takes 6 days to get from here to Europe, when I could do it like that for a penny on the blockchain. So anyway, there's a number of reasons why it's great. I could write a whole thesis on it. But again, still a very small percentage of my net worth. Even though I love it, I'm not going balls deep on it because, again, I could be wrong. Just like with shorting. If I'm wrong and the market rallies and rallies and rallies, I'm still going to stay short. But if I see data that convinces me that we are not going to see a deeper recession, I will switch out from being short to long. I will close all my shorts out. I will take $1 million loss. I'll go long. I'm not seeing that data. I'm seeing real estate suffering. I'm seeing job loss. I'm seeing retail spending at Walmart, at Amazon, specifically Walmart and Target, down 20%. And it's just the start. The lag of like, you lay people off, people lose their shirts, then they stop spending. They're stop spending now. People are suffering now. We're not even there yet. The effects of what's happening with interest rate rise effects hasn't even hit yet. It's lagged. So the pain is still coming. And all the data, like we see Walmart's earnings were shit, right? We saw that consumer spending is down. That's bad. People aren't spending, which is what they want because they want to lower inflation. But it's bad from a sense, like economically speaking, for growth. When spending stops and inventory levels rise in real estate, in retail, that leads to layoffs. Layoffs lead to more decreased spending, and we lead to basically a recession, right? A full recession. That's coming. And the market's like, rah, rallying. I'm like, what? They're like, Walmart releases the shittiest earnings I've seen in a long time, and the stock does drop, but it's fully recovered, and then some. It's like, what? Did you guys not read the same earnings report I read 2 weeks ago? Like, it to me feels like a bit of a bull trap. I don't know. It's been painful holding my short position for this last 2 weeks, but I'm looking at the data, and I'm like, I could be wrong. Again, if we see some really great jobs reports continue to come out, if inflation gets under control for a good 6-month period, if, housing bounces back and rates start coming down, and okay, I was wrong. I'll go long. No harm, no foul. 2-3 years, I'll be recovered again. I think we're in a rock and a hard place right now, and it's a bull trap, and it's going to get much, much worse. I could be wrong. If I'm wrong, oh well. I mean, someone said that if you're wrong, you're really wrong. Not really. I mean, I'm not shorting like 10-1, right? Like if the market drops 2%, if the market rises 2%, I lose 2%. It's not like I'm 10-1. Like if the market like rips up another 20%, I drop 20%. Darn. Like it's not the end of the world, right? Yeah, I mean, the market never goes to the moon. I think we're going to be in a pretty safe range given we're in a bear market right now. Where with interest rates where they are, I think there's only so much further the market can go. Specifically just the NASDAQ. I don't see it going to all-time highs. We're not in the euphoria that we were in January. It would make no sense for it to get back to those levels. And then to surpass those levels, like what? What is the upside? I see more upside being short the market right now. So I will continue to be short the market unless I see data that suggests that we are on a full recovery and the recession is not looming in 2023, 2024. We only got a taste. People haven't even felt any pain. The average person is not even affected right now. A little bit by inflation, but like if you look at consumer debt right now, people have more debt on their personal balance sheets than they've ever had before. They're living on debt right now. And they're a domino away from it collapsing on themselves, right? And interest rates are rising. What? Like, it's going to get worse. It's going to get worse. I think it's going to be a bear market for at least till 2024 Q4. That's kind of where I see things really improving. Same with crypto. Again, I've got a whole bunch of cash now on the sidelines for that opportunity to buy crypto at the bottom, and it will rally in the next halvening, 2024, 2025. But I think it'll be flat and trade within a band range. So there's not a lot of upside. I don't know, and there's lots of downside risk. So being long the stock market right now, I see a lot of downside risk. If anything, I'd just be sitting on cash, doing lending or something like. Yeah, I see a lot of downside and not a lot of potential upside at the point we're at right now, where we just rallied. July was statistically the best month we've had since 2020. Since I think it was October or November 2020. Put that in perspective. We rallied out of COVID in November. It was like the biggest rah-rah. We had a rah-rah month of like 16, I think the QQQs of like 16-17% on the month. That's insane. To rally 16% in 1 month? Why? I don't see any great catalysts for a run up. Anyway, it's a lot of people playing games. So here we are, guys. Look at WD work on astrological correctional market cycles. I don't know anything about that at all. Under 400 days left until all registered silver is out of the COMEX thoughts. I believe they are losing around 0.1% per day, and I'm sure it'll extrapolate as soon as it gets closer. I have no idea. I don't follow that at all. That's interesting. Interesting tidbit. Does that mean that your ETH 2.0 will be staking though? Yep, ETH 2.0 will be staking. That's it. By the way, setting up some nodes, setting up some ETH nodes, and staking your ETH can get you 18 to 20%. A great place to put your ETH, where it's safe, right? Really, really safe. It's not like staking on Celsius. Crypto mining, again, I'm still bullish on crypto mining. Every day, dollar cost averaging in, right? It's I get really bullish on that as well. You're right. ETH and Bitcoin are both proof of work right now, so you can mine it. You could sell your currency and then buy a bunch of miners and get a great return on your capital. It's like 5% a month mining. And you have the hardware. So worst case scenario, you sell it to an engineering firm, a gamer, build a bunch of computers and sell them on Facebook. Like you literally have so many exit opportunities. If crypto goes to zero, you've got tangible hardware with real value. The graphics cards are worth $1,000 or $1,500 a piece. Like, I've got millions of boxes everywhere. Like my whole office is like components and parts. This shit's real. I know you guys don't like to hear that, people who are like super bearish on crypto, but like my physical data center full of computers, it's worth real. And yeah, I'm getting paid in crypto, but I can convert that to fiat daily if I wanted to. Done, every day. Get a great return on your capital. 5% a month, I think it is right now on most hardware. So that's a great return. Where can you invest in hardware, tangible hardware that like will hold its value? You can use these graphics cards for anything. Just game with them, right? Like whatever. Engineering firms, architecture firms. You could lend them out to engineering and rendering and do rendering for people. Like you render big graphic design projects, YouTube videos, architecture. There's websites now where you can literally rent out your GPU power and they'll pay you to use your graphics cards to process and do the damage to your cards and your hydro. So a lot of firms are like, hey, why would we spend $50,000 on a supercomputer when we can just upload our stuff to the cloud and just outsource it and render it elsewhere? So that's something too, where there's value in these hardware components. So there is real value in the crypto network. So people who think it's Fugazi or whatever, Bitcoin and whatever, and there's value in the node network, in all the hardware. I don't want to get into it right now. You could host nodes in the cloud too. That's true. William says, I agree, long recession. This isn't over quickly. Vegas is running out of water. People are getting overextended. Prices are high for anyone on fixed income. Yeah, I mean, everything's fucked for people on fixed income. If you make 50 grand a year salary, it's not like it was 3 years ago. 50 grand 3 years ago and 50 grand now is like, 50 grand 3 years ago is like 37 grand now. You know, it's just not the same, same buying power. However, real estate prices falling would help normally, but interest rates are double, so your mortgage payment, even though the price of real estate has fallen, your mortgage payment's still way higher than it was in January at the peak. You're better off buying at the peak and locking in a low rate mortgage. I know it sounds crazy, but like, just a fact. Okay, I think I've got all these questions kind of. Oh, someone says, Dripset says, should I burn cash flow $250 a month or buy expensive A+ cash cow? It depends. It depends. I think that there's something to be said about owning quality real estate in quality locations. That said, if it isn't cash flow, you said it was cash flow positive though. So if it's cash cow in an A+ location, no brainer. Go that way. Odds on a China versus Taiwan war in the next decade? I doubt it. I doubt it. I know there's a whole bunch of talk, but like, China's not taking on the US right now. The US's military prowess is just unmatched. They are a powerhouse. They have technological advancements that China doesn't have. China has a huge army, yes. They have a lot of people, yes. But they're technologically, like the machine equipment, the jets, all of that isn't great. So just at its face value, I would say that would be a stupid idea, but it could happen. It would be a major recession. I would love that. I'm shorting the market. That would be just, I don't think it's going to happen, but I would love it if it did. Then a little bonus. I'm not betting on it though. It would be economically, disastrous. Silver and gold is great too. I have some silver and gold. I continue to be, it's one of the asset classes that I also like, just like I like crypto. I like with crypto that I can have it on a USB hard drive and away I go, boom, get on a plane, away I go. I can't bring my real estate with me. I can't bring my cash in my bank account. I'm gonna freeze everything. But on that hard drive, you've got everything, right? You got that solid state. Don't keep your money on exchanges. Obviously not your keys, not your crypto. So go get a hard wallet that you have full control over. It's yours. Wherever you go, you can bring it to any country. It's good in anywhere. So yeah, I'm a big fan of having a little bit of oh shit money. Like you should have like 100,000 in Bitcoin, Ethereum, and in a USB that you can just take and go. If the world goes to shit, everyone should have that, I think. Yeah, I think I got all the questions banged out here. Yeah, I think I did all the questions. Cool. All right, everyone. Thank you so much for watching. It's been a great episode. I've appreciated all of your comments and feedback. And if I missed it, find me at Mike Rosehart on Instagram, rosehartcapital@gmail.com if you want to reach out and partner up or something. I'm only looking at long-term relationships where we can continue to recycle capital and do something for the long term. I don't just want to do a one and done. It's not something I'm interested in doing. But if there's a strategic partnership that can make sense, always reach out. I'm always happy to hear someone reach out and shoot their shit. Shoot their shot, I guess, as the saying goes. Thank you so much for watching, everyone. Remember, the secret to unlocking wealth through you. 3 levers. Spend less, earn more, maximize returns on the difference. Bye, everyone. See you next week.